Live in 3. Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FXPesa. So today we'll be focusing on the New York Open. We'll be trying to understand the key market trends. We'll try to understand the impact of the Cyber Monday. That was yesterday on the markets. And once we go through this, we look at the economic calendar before we look at the price action setups. So hi, Philip. Thank you for joining the session. There's a good question. What's happening? I thought GBP was stronger than USD. It seems the USD has regained over the currencies. Yes, it's a good question. We'll be looking at that as we continue shortly. So among the key highlights in the market today, the following. So first things first is the UK Black Friday shopper numbers. The transactions were much lower compared to the same period last year. So British shopper numbers and transactions edged lower on Black Friday versus last year. And this is according to data published on Monday that will disappoint retailers looking for a pickup in spending after a subdued October. So we know the entire story of the UK and what has been happening. High interest rates, high inflation has led to a significant hit on consumer budgets. So in this case, we were expecting to see an upwards trajectory in spending during the 3 holiday days, and that's the Thanksgiving, the Black Friday, as well as Cyber Monday, where there is a lot of discounts from retail chains. But then this did not happen as expected in the UK. However, there was the complete opposite reaction happening in the US. So deal hunters on track to spend record $12 billion in US Cyber Monday shopping spree. So for those who are not familiar with Cyber Monday, it's the one day that retail chains, especially companies like Amazon, Apple, tend to offer the biggest discounts in the year. And this is the day that they make their largest sales in a typical year. So spending online on Cyber Monday is set to exceed $12 billion, a record, as bargain hunters snap up deals on items, including Barbie dolls, Lego sets, headphones, smartwatches, and so on. So the estimate projects US shoppers will spend $12 billion to 12.4, and this is the biggest US online shopping day. So a significant portion of this spending, around 4 billion, is expected to occur between 6 p.m. and 11 p.m. And this was yesterday. So particularly from last minute shoppers, it said. At the top end, this would represent a 9.7% increase compared to the $11.3 billion that was spent on Cyber Monday last year. So retailers have been coaxing inflation-wary US shoppers to open their wallets on Cyber Monday with push notifications, text messages, and video streaming ads touting heavily discounted cosmetics, electronics, toys, clothing, and other products. So that is set to be the biggest news today, because today we should be having the data showing how the sales happened yesterday. So remember, this is the last week of the month, and of course, the first Friday of the month will be this week, but we will not be having the non-farm payrolls data, so that now moves to next week on Friday. So next week on Friday is when we'll be having the NFP data, which now means that the biggest news for the week, especially in the US side, will be the core PCE price index, which will be released later in the week, and that has the biggest potential to move the markets. So from what we are observing since the beginning of the week is a slow movement in the markets. We are seeing low volatility, especially on Monday. Then today, we didn't have much happening. So perhaps we'll be seeing some volatility coming into the markets during the New York session. And this is after we look at the Case-Shiller Composite 20 House Pricing Index. And this is expected to cause volatility, especially when you combine with the fact that yesterday new home sales data came in weaker than expected at 679K, which was missing the expectation of 724K, and of course missing the previous number of 719K. So this will give a much more fulfilled indication of the trends in the US housing market. So at the same time, we'll be looking at the Conference Board Consumer Confidence Survey, and this will be happening at 6 p.m. And then 4 Fed members will be presenting a speech later in the day. So we'll be looking at a speech from FOMC member Goolsbee at 6 p.m. 6:05, we listen to Waller, 6:45 Bauman, and of course, FOMC member Barr at 9:05 p.m. and 11:30 p.m. So in between, we'll be having also 2 speeches from Europe, one from ECB President Lagarde at 7 p.m. and MPC member Haskell at 8 p.m. Representing the UK. So clearly, a day where we're expecting a lot of talk from FOMC members, these at least guaranteed to have some movement of light, where we could be seeing some volatility coming back into the markets. So tomorrow, quite a busy day. We start with inflation data from Australia, where we're expecting inflation to have slowed down 5.2%. Then we look at the New Zealand interstate decision, where we expect the RBNZ to hold rates level at 5.50%, before we look at both German and Spanish CPI, which are expected to have slowed down into disinflation territory within the last 1 month, and that's October. So preliminary GDP from the from the US, and this Wednesday at 4:30 p.m. Then a speech from BOE Governor Bailey. Of course, the major news is happening on Thursday, and this is when we'll be focusing on the core PCE price index. And of course, the OPEC Plus meetings will also be happening on Thursday. So speaking of the OPEC Plus meeting, I think this is something we discussed earlier in the morning during the market snapshot series. So I'll be trying to find this so we can look at the highlight. Somehow the data is coming in more, and the data about the OPEC is just moving down the scroll. So if you have any question or comment, feel free to type that in the live comment section, and I'll be responding to that as we progress. Yeah, this is taking some time. Yeah, finally, I found it. So Brent oil rises, and this rise is very important since we have had a couple of days where the price of Brent oil was just dropping. So Brent crude futures rose above $80 per barrel on Tuesday, and of course, we know that the sister WTI or US oil also rose to above $75 per barrel, snapping a 3-day decline as investors geared up for the OPEC Plus meeting, which is due later this week. That's on Thursday. So Saudi Arabia and Russia are widely expected to extend voluntary supply cuts until at least the first quarter of next year. So traders are also speculating that the group could deepen production cuts further to support the market. So last week, oil prices came under pressure after the OPEC Plus ministerial meeting, initially scheduled for the 26th of October, was postponed to November 30th amid a dispute over output quotas for African producers. So signs of robust supplies, particularly from non-OPEC countries, have also been weighing in on crude oil prices, with US crude inventories continuing to increase more than anticipated. Meanwhile, the International Energy Agency, or IEA, said it still expects a slight surplus in global oil markets next year, despite the potential extension of OPEC Plus supply cuts well into 2024. So knowing that, and now looking at the charts, trying to understand what's happening, I believe it makes more sense to start right from the asset that you've just covered, and this is Brent oil. So after having this decline that lasted about 3 days, and then yesterday in the afternoon, the market gaining some ground and recovering some of the losses, today we have seen a majorly bullish oil market, and this is very much welcome, especially for traders who has been speculating on an upwards trajectory in oil. However, it's important to understand the overall price action, and this is basically showing what we call a symmetrical triangle, where prices are just consolidating and we don't have a direction yet. So the only time we will say we have a direction is if the price either crosses the upper trend line, the blue line here, or the lower trend line, the blue line here. So as part now, from what we are seeing in the price action, it's a sequence of movements up and down, and now it seems like we are on an upswing. right from the lower trend line back towards the upper trend line. So a potential rally to $82 per barrel could be playing out as we approach the New York session. So if you look at US oil, this one, I believe, already hit $75 per barrel. So it's already at 75.5. But then if we zoom out, then we tend to see the same kind of occurrence where the prices are just consolidating along these lines. And then from the lower side, from the most recent low to this other one, and then this other one, then we still have a symmetrical triangle, which basically implies that from around this period to this period, oil prices have just been moving sideways. So today is a welcome addition to the bullish momentum. So in this case, I expect this price to continue moving higher and at least touch the upper trend line somewhere around $76.8 per barrel. So besides looking at that, there's also the question of gold, which is the other commodity that we majorly cover. Gold has been stagnating for the better part of the day and yesterday too. So we don't have much of an activity here. So if you look at yesterday's price action, we started with a big spike all the way up, touching our target of 2018. And this is something we have been analyzing for some good time now. So if you look at past prices, you'll notice a period where gold had found resistance at 2018. And now after making this big rally, we eventually got to that. So after this, the market did not move much yesterday. So there was a pullback and the market kept playing around this range for the better part of the day, closing at around 2013. So today, an attempt to retest the area again at 2018, then this sideways momentum has followed. So we can't conclusively say that gold prices have been moving as expected. So in this case, I would say it's still a muted market where we don't have much activity. So activity could be coming up maybe later in the day, but as per now, it makes more sense to track this range, which is much smaller than yesterday's. So with this range in mind, remember, a potential breakout will give us direction. So for instance, if gold prices were to break this level and move lower, then our new targets could move down to 2008 as well as 2006 dollars per ounce of gold. So it would imply that the direction for the day is bearish. So as per now, we stay put, observe this range, and wait for a potential breakout. So as for US equity indices, we have seen some form of light coming in. So during the morning hours trading, when we were doing the market snapshot, we saw the Nasdaq make a big drop and then later in the afternoon make a recovery. But then from the current price action, it seems like the weaknesses are taking strength, or basically saying that the bears have entered the market and they are pressuring for further downside momentum. So since the open of the day, you can see the overall direction is downwards. So there is a good likelihood we'll be seeing some further downside momentum, especially from the Nasdaq. So looking at a smaller time frame, in this case, the 15 minutes chart, there seems to be a trend line showing the support that has been holding around this area here. And of course, yesterday's low, the market is just about to break that support. So in this case, if this was our resistance and this was our support, what we are basically looking at here is a potential break happening before we get to 5 p.m. So that presents a potential market entry opportunity. We just have to be patient and see a confirmation of that break. So as for US 30, or what we call the Dow Jones Industrial Average, what we are seeing here is a clean break. So if the next 15 minutes we see the market closing lower, then that will indicate some further downside momentum. And of course, the target remains at 35,225, which is the base of this pattern. So same case applies to US 500. Breakout has already happened following the trajectory we have here. So I'll try and remove this. Somehow it's defying me. So this has been the support for last week, then yesterday, then today, the market has broken that area there. So now the base of the pattern is this area here, which was acting as support and now also as a resistance. So in this case, the expectation is that the price keeps on trending downwards. and at least we get to around 4,525. So European equity indices have also been pretty weak. So it's something that I was analyzing yesterday, looking at a potential setup where the stop loss was just above the previous high and a target at the base of this pattern here. So 4,286 seems like something worth testing. And in the same way, there's also the performance of the French 40 index with the stop loss just above the previous high. And of course, the target goes to the base of the pattern. We're already halfway in there, and potentially we could get to the 71.64 price level. So the most aggressive equity index today has been the FTSE 100 or the UK 100 index. So after having broken this support here, you can see the direct acceleration downwards that went all the way to the support. So remember, the target was set based on the previous low here, which was 7,403. So immediately the market got to that area, there was a strong bounce, and the market is looking to retest this area here. So this is the one index where we are seeing out of bullish momentum. And now the target remains 7,448, which is the most immediate resistance, which was serving as support before. So as for currencies, we have seen the USD JPY managing to mount a comeback here in the afternoon hours after the big sell-off early in the morning. So right now we can see these attempts where the market was attempting to move further back downwards, but then the strength has resumed. So with the strength resuming, then the original idea remains. And the original idea was that the market gets to retest this area here. And once it has done that, then we potentially look for short selling positions right after that area has been retested. So in this case, if you zoom out, it makes more sense. This was an area of support, and now it could be turned into a resistance for USD JPY traders. So for pound USD, we are seeing a triple top here, where the market tested this resistance, the first, second, and that time. And in each of those cases, it failed to break, which leads to that potential that the market could be reversing now, and we could be seeing the prices headed further back downwards. So from a 15 minutes chart perspective, this is the area we are monitoring here. So we have to see a confirmed clean break before deciding to go for short selling positions. So this week, we have been seeing this trend line acting as support. So unless it's broken, then we assume that the market remains within that pattern, which is more or less like a triangle or even a rising, or I would call this an ascending triangle. So we don't have a breakout yet. So we just remain put until that opportunity presents itself. So for Euro USD, also an attempt to break above this level on so many points here and also here. It seems to have failed to break that area here. And now we remain patient to see whether there is evidence of bearish entry. So far, it seems to be attempting several times to get to this area, and potentially we could see a break. So with a weak dollar, the signal to go for a buy position would be if the market breaks this resistance at 1.09634. So as for USD CAD, we had a clean break towards the lower side. So the break was right here in the morning. So we speculated that the price could drop and get to the previous support of 1.35681. If you zoom out to the 4-hour chart, you notice how strong this support really is. So immediately after the market got very close to that area, it didn't quite touch it. We saw this market bouncing quite strongly. And in this case, the dollar making a very important recovery. So from the price action here, it seems to me like some good evidence of bullish entry, especially following the story that this was a bearish momentum, a pin bar, and then we had this indecision candlestick, or what we call a spinning top, followed by 2 candlesticks towards the upper side with a long tail towards the lower side. So in this case, it's evidence of bullish entry. So we could be seeing the USD CAD pair bouncing from here. And of course, the target becomes this area here of 1.36547, which was serving as the high of yesterday. So if this bullish momentum continues, then the target is all the way up. So for AUD-USD, we are seeing this pullback happening here as the dollar tries to take some strength back in the markets. So I mentioned the 4-hour candlestick is not very promising in the morning session. So whenever you see such a 4-hour candlestick, it's indicative of a rejection of higher prices. And since then, what we have been seeing is the market attempting to push further back downwards. So in this case, as the dollar index looks to make some form of recovery here, then we could be seeing the AUD-USD taking a step back. So for the dollar index, it hasn't made a recovery per se. Yes, we are still in the green since the open of the day, but then this particular trend line has not been broken. It's a 5-day trend line. So in this case, we await to see if the dollar index breaks above this trend line. And in that case, it could signal buying the dollar across many pairs, buying the dollar against the yen, buying the dollar against the pound, buying the dollar against the euro, and of course, against the Canadian dollar. So we don't have that evidence yet, so we stay put. Sometimes it's better to just be patient and wait for the right moment to bounce. So it's the same thing I have seen with USD CNH. So we don't have a breakout yet, but it seems imminent. So we could be seeing a breakout happen as soon as the US stock market opens, and this could lead to a good rally for the dollar against the Chinese yuan. So it's the same thing for New Zealand USD. Yes, there was this attempted continuation of this bullish momentum, but then today all we are seeing is weakness in this bullish momentum, and potentially we could be seeing a reversal if the dollar was to be pretty strong towards the end of the day. So USD CHF, we are seeing the market maintaining this pattern here. So we don't have a break yet. So in such a market, we just choose to stay put until there's an eventual break for either of these trend lines. So I'll be checking to see your questions, to see if there's anything that I may have missed. Then after that, we end the session. So hello, J-Squad. I can see Takeout, Malombe, Derek. Good evening, Patrick. Assuming it's evening from wherever you are. Will the dollar strengthen? It seems likely, but it hasn't happened yet. What can you say about the Nasdaq? I think I've already covered that. So from the first question I got here, I know the GBP is stronger than USD. It seems the USD has gained over some currencies. Yes, in the morning, we saw the dollar index trading really low, which was quite promising to continue shorting the dollar. But then this was what was happening. The market bounced from this area, welled all the way to the upper trend line, found resistance, and pulled back downwards. So the overall expectation was that the dollar index continues weakening. And now, from what we are seeing from the current price levels, it's just another retest of this area, and it seems like the market is still continuing with the bearish momentum. So bearish momentum would lead us back to the previous low, that is the low of the day. And if this was to be the case, then it basically means that we see other currencies strengthening against the dollar. So in this case, for pound USD, I mentioned that a break above 1.26360, and this is the brown line that you see here, then it would mean that that's our entry point if the market was to break above that area. So what we have seen in the afternoon is the market pulling back downwards, finding support here, and moving back up, which means it remains within the same consolidation pattern. So the overall direction here for the last 2 days is this. We can't say the pound has been moving up or down. This is the overall direction. So until this has changed, and that means the price breaking above this trend line, then we don't have an opportunity yet. And it's the same thing even for Euro USD. Until this area has been broken, we can't say that the market has been moving much. If I move to a smaller time frame, say the 15 minutes chart, I zoom out, and then you look at the last 2 days, this is what we have here. Sorry for that. So what we have is a market that is following this line here. So it's a slightly bullish channel, but it's not moving much. So this is what it looks like for Euro USD in the last 2 days. So where if you are to estimate the overall direction, it would be something along these lines. So until you have a clean break, it doesn't make any sense to hurry or chase after the markets. So the incoming news at 6 p.m., that's a good question. Let me try and share my screen. So as I mentioned, from 6 p.m., we'll be having some news. But before that, we also have the 5 p.m. news. So CB leading index for China may not have as much impact in the markets, but then the Case-Shiller Composite 20 Housing Price Index is very important, especially for US market players. So in the previous reading, the housing prices had increased by 2.2%. And in this case, we're expecting the number to have increased to 4.0%, or sorry, by 4.0%. So if you happen to see this, then this would be quite a challenge, because when housing prices are moving higher, it's contrary to the Fed's expectations, which might lead to some further tightening. And that is being summarized as being positive. So yes, positive for the dollar. But then if housing prices are weakening, just like we had yesterday, weakening in the home sales, then in that case, it could be consistent with the Fed's expectations, which means no further rate hikes. And this might lead to the assumption of a weaker US dollar. So at 6 p.m., it's the Consumer Confidence Survey. So the Consumer Confidence Survey is done by the Conference Board in the US, and it basically surveys about 3,000 households, which asks respondents to rate the relative level of the current and future economic conditions, including labor availability, business conditions, and overall economic situation. So what I normally see is that the Consumer Confidence Survey communicates directly to people's incomes. So if the survey was done on your household and your business is not doing well, or the farm where you work, they are retrenching people, then you'd tend to give a bad outcome or a bad projection about the economic conditions. But then if you just had a pay rise, your business is doing well, you don't have any debts that are stressing you, then you naturally tend to give a fair outlook of the economy. So in this case, if we see an improvement in consumer confidence, these are two assumptions. One, if people are confident about the economy, they tend to spend more. If you know that you're going to have some more money on December and on January, then you spend more from the one you have right now. So in that case, it tends to be inflationary, and it can lead to the central bank deciding to implement measures. And these are measures that would further tighten the economy and strengthen the dollar. So the other edge of the sword, in this case, we are looking at people spending more. And in that case, it would basically means that businesses are doing well because they tend to sell more, and it's an overall positive outlook for the economy. So in this case, the CB Consumer Confidence Survey may have two different or varying implications. But then the key idea is that if people are giving a positive consumer confidence report, they have more money in their pockets. And in that case, when there's more money, then it tends to be weakening for the dollar. So anytime there's more money within an economy, then it basically leads to the weakness of that currency, because there is excess currency flowing around. So from what we saw right here on the issue of deal hunters, we know that a majority of the spending that happened yesterday was largely supported by credit cards, and second, supported by what we call the buy now, pay later. So the uptake of the BNPL has been extremely high in the US, especially this month during the holidays. And it means, yes, people are spending more, but it's not because they are earning more. It's only because they can access more credit. So in that case, it's a temporary strength. And it means that the central bank or the Federal Reserve policies are working as expected. And in that case, we should be expecting some weaker dollar as investors speculate. The Fed may start cutting rates as early as the first quarter of next year. So that's it for the day. I'm just checking to see if there's any question that I missed. Breakout will happen in this session, hopefully. That dollar is coming in weak. Yes, after the current bounce, it seems highly likely that we will be seeing some further downside momentum. So the candlestick is relatively stronger than any other candlestick before the one that just happened at midnight. So if you continue seeing a much weaker dollar across board, then you basically know what to do. So if it's a weaker dollar, you can already see it being reflected in USDN. So for pound USD, you can already see it being reflected here. And of course, for Euro USD, you can see this being reflected. But then we haven't broken out of certain limits or conditions. So it might make more sense to be more patient. So also notice how we had discussed this range in gold. Looking at the potential break at this area, the break did not happen. So we stay put and be patient until we have a clear break. So that's it for the day, and enjoy the rest of your day. The indices are bouncing. So the Nasdaq has already bounced from the lower trend line, so no clean break. The Dow Jones has already bounced, and of course, the S&P 500 is now reversing. So clearly, we don't have any major breaks. So perhaps it's only the news announcement that could cause potential rally or sell-off in the markets. A very good question. As I approach the end, relationship of the dollar and the Nasdaq. Traditionally, we had this relationship where the dollar was going up, Nasdaq was going down. Nasdaq was going up, dollar was going down. But right now, there seems to be some form of positive correlation. So for the better part of the year, the dollar has been gaining and the Nasdaq has also been gaining, which means that that relationship is broken. So in this case, you might want to consider analyzing the two assets differently.